Hello again people, this is Groundhog Day yet again. Apologies for some of the lines on the charts and not dragging and dropping the trade onto the charts, but I fluffed the previous video on this one. But nothing changes. Pre-Frankfurt open again, it's now 6:48. It was about 6:30 when my trade closed. You can hopefully clearly see why. Massive H4 candle. We're only 49 minutes into the new H4 candle. And what do I say to look for? At 6 AM, look for a massive candle and then try and find yourself an entry. And that's exactly what I did. Flicked through a few charts, landed on GBPNZD. You know I don't trade this very often, so you know probably that I've had a search around this morning. Hopefully you'll believe that. And there's nothing else really to be said about this except the H4 led the way. So once I've opened the chart, looked at the H4 candle, then I start drawing my levels on. So actually I can clear this down and we'll go through it level by level. So there it is, massive H4 candle, nice little area here to potentially look at targeting. Let's have a look at the daily as well. With a massive H4 candle, obviously the daily is going to be, green candle, the daily is going to be pretty strong as well. So let's draw a few levels on the daily. I didn't need to do that, quite frankly, because the H4 led the way, and then it was a question of quickly assessing where the levels were below me, so on the H4 chart really, and below. So we can clearly see this flip area as well. That wasn't taken into account for the trade, but look how it's hit that level. The buyers have pushed it up and the sellers have won. Well, not won, but pushed it down. The buyers pushed it up again and the sellers repelled the price. We can see where they did, and I could actually go and look into the left hand side of the chart more carefully, but I'm not going to. But this is where that resistance potentially went to. If you go down on the lower time frames, you will see more and more levels, obviously, that may affect price, like we're going to do now. So H4, this would be the first area of potential problems to the short side, and lo and behold, it did that. It hit that and it's bouncing. You can see the wick below there. So that was my target basically. And then down here, this is a potential area that may well get tested, but I've got my 10 pips, so I'm not worried. I might take an extra trade, but remember, this is bullish, massively bullish. On this H4 chart, we've busted the 20. Another reason that this may well print a red bar here. So all things to take into account, guys, when you're doing your back testing and own analysis. Remember, never trade anything I talk about. That's the old disclaimer, jobby done. H1, just checking, I'm double checking I haven't missed anything on this. You can clearly see a support level here. That's nothing to do with the trade, but it's just incidental. Look what happened when the price hit it there. It's come back to use that support level as its sort of close and open level, flip zone if you like. All of this is as a result of thousands upon thousands of hours of studying price action, guys. So you can't beat screen time, but hopefully I'm helping you to shortcut that. So nothing really to look at. Remember, H4 led the way for this trade, so these H1 levels are potential areas, problem areas for anything you want to trade to the downside. Obviously this is prior to my trade, so needs to be carefully thought about, and we could put that H1 low on the doji. That is a definite support level there. So the reason for putting these is when they're broken, even on lower time frames, it does have a significance, of course. So we close below it, that's good. Then we've had a sort of pullback, and again, the pivots, I don't really use them for my trading, although I like them. I've added them to my chart because I know a lot of institutional traders and big players use them, but we'll clear them down for the moment. So now we're getting into the other aspects of this potential push to the upside. No, I'm looking at divergence, although I didn't look really closely for divergence before I entered the trade. 30-minute when I entered was actually turning red. It wasn't red. I would prefer the histo alert to have closed red, but it hadn't. It was turning red. Nothing really. Oh, actually there is something to report here. Is that higher than the previous candle? High 143, high 156. No, it's not. Otherwise I was going to say low, high, higher, low, higher, high, high, low, lower, high, lower, low, and close, but it wasn't. That was the highest high, so that is the relevant candle for a reversal on the M30 chart. M15, incidentally, as it stands now, which is after my trade, we've got a downtrend forming. High, low, lower, high. We've broken the low there. You could actually draw now, but not when I took the trade, a descending trend line from here, connecting the green high there to put a what I would call a valid trending descending trend line on there. So M15 now. M15 had reversed down, low, high, high, low, high, 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 low, lower, high. Doesn't matter whether that or that was the one that broke it, but we have definitely reversed on the M15. You have to be careful you haven't reversed to the long side on M15. Back up. That would be the reversal level. I wasn't too bothered about this, but it did reverse to the long side. But the H4 candle was enough, and all the other analysis was enough to tell me a short was on the cards. But categorically, if this wasn't before the Frankfurt Open, this would be risky. You would want to wait for the price to reverse to the downside, and by that I mean low, high, high, low, higher, high, high, low, lower, high, lower, low, and close, which we've done with this candle now. So this is just a pullback, and you can clearly see the downtrend in place now. That's why these are worthwhile drawing once they are validated, of course, because this is telling you now we've got a valid downtrend in place, and now the candlestick closure has confirmed that. But all this is post my trade, of course. The trade really was just based on the big H4 candle and then proper analysis of everything else, and looking at the histo alert as well, right down to the lowest time frame you can get on. We've got a clear break of an ascending trend line in here now, and this is why it's so important, in my opinion, to draw them, because this is an uptrend now that has failed and has broken back down. And then we can clearly see now on the 5-minute chart the price is starting to collapse. But you have to move fast on these, so a little bit of discretion is required. That's the 1-minute chart now, and we can clearly see the trend in place here: high, low, lower, high, lower, low, pullback, and I entered based on this confirmation here, really. Low, high, higher, low, higher, high. We engulfed down on the 1 minute, and then we engulfed down yet again, engulfing candles, outside bars, call them what you like. They are very similar. The engulfing encloses the body of the candle, the outside bar encloses the whole of the high and the low of the candle. That's the difference. And that's pure price action going on there, guys. Tiny bit of drawdown, nothing particularly to worry about. 11 pips plus the spread, probably 12 or 13 pips, and then it collapsed. So sensible stop above swing 2, swing 1, swing 2, swing 3. So a stop above there is suffice, and which is about the 15 pip mark, and then just enter the trade. So there you go, guys. That's this morning's trade, based basically on the H4. Masses and masses of possibilities all over the place. I only looked at GZ, the first one I came across, so that's the one I took. Thanks for watching. Have a good Tuesday.